right, let's see what we got here. I don't know. It's a pretty quiet Monday. We have trade deals with China, more Bitcoin Treasuries, a new tax bill, pharma getting turned on its head, all the major indices breaking through key resistance. I don't know. I think this can wait till Friday. Now I'm just messing with you guys. I wouldn't leave you hanging, but all joking aside, this had to be one of the craziest mornings of trading I have had in recent memory. The volatility was off the charts with that big gap up, a notable retrace, and then rallying again into the later part of the day, all while crypto seemed to be running counter to the trend, although we do think it's going to consolidate for a bit after that big run up last week. And add to that the gap up erased all losses from Liberation Day, at least on a generalized scale, and Goldman Sachs has reduced recession odds to 35%. So how are markets looking for the week ahead? Is Bitcoin going to hit new all-time highs, or are we just all going to get derailed by another wild tweet? We're going to discuss all that and look at the key charts with a few old favorites thrown in for stocks, commodities, and crypto. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all enjoyed starting the week with some green in your portfolios after that big run up over the weekend. I'm recording a little bit late today because I was just watching the SEC's Crypto Task Force roundtable discussion. God, that's a mouthful, but it's very encouraging just to see how smart everybody on the panel is that's heading this up. They realize the massive possibilities of tokenization of assets, but they also clearly understand the risks and challenges. They had a very in-depth discussion on cross-chain cryptography and the challenges there, the possible solutions with ZK Sync. So if you are into that kind of detail, I'd highly recommend catching the recap on YouTube. The last roundtable discussion is going to be on June 9th, and they're at a sprint to kind of build the framework for everyone. So if you have questions, concerns, or even ideas for the task force, they encourage you to go to the SEC website and submit those in advance of that last meeting. Now, before we dive in, if you do find value in the content, please like, comment, or subscribe below. It really does help the channel, and it does mean a lot to me personally. Also, as I mentioned on Friday, I'm posting a lot more on X since these videos only come out twice a week to give you updates on things I'm watching, potential trades. I'm posting all of that there on X, and the link is in the description down below. So if you're keen to subscribe, you can find that there. Okay, so there's a ton to look at in the charts today, but first I want to cover a couple of bigger picture macro items that I'm watching. The first one would be semiconductors, which had a huge breakout over the weekend. Now, this seemed to be the best performing sector today, and if we compare SMH to SPY, you can see that while the sector had been lagging the S&P 500, we broke resistance and it's starting to outperform again. And this is important because we really need to see semiconductors come along for the ride if we're going to hit new all-time highs. And speaking of semiconductors, if we look at this chart, some of the best values still seem to be in NVIDIA and TSM, and those are names that we've both been tracking here. I'm personally now much more optimistic about the V-shaped style recovery scenario playing out, but I'm keeping my eyes on this sector as it's going to be the catalyst we need to get us there. That aside, the crypto industry saw more tailwinds today. Beyond the SEC roundtable, the SEC chairman Paul Atkins was calling for clear crypto rules and on-chain innovation to make the US the crypto capital of the planet, as he put it. Here's a quick clip.
A key priority of my chairmanship will be to develop a rational regulatory framework for crypto asset markets that establishes clear rules of the road for issuance, custody, and trading of crypto assets, while continuing to discourage bad actors from violating the law.
Man, that is a refreshing change from the previous administration that was just blocking this industry. As we've been pointing out, this sector has been outperforming, and it seems that the tailwinds aren't going to stop anytime soon. And just in the last few days, we've seen another 4 companies in the NASDAQ embrace a Bitcoin Treasury strategy approach. And if you've been playing any of those names, there have been some good gains to be made. If we flip over to the healthcare industry, that one is really getting hit now by the US's new most favored nation pricing on prescription drugs. If you remember back to, I think it was one of our first episodes, where we were looking at the weekly head and shoulders on the XLV chart for healthcare, and we were wondering what is going to be the catalyst that's going to make that break down. Well, this could be just that, and it's actually a great sign for us if we want to see more upside in markets. That's because when healthcare is outperforming the S&P 500, it normally marks the tail end of a bull run. However, if this sector is breaking down, it points to potential upside over the next 6 to 9 months. Lastly, looking just a little bit further down the road, we're seeing CapEx spending cuts by some of the biggest names out there, and they're putting more money into rewarding shareholders via buybacks, and they're also rewarding themselves via compensation packages. Now, this can juice things in the short term, but it's a signal for trouble ahead in the next, say, 3 years or so, when we start to see a lag in performance due to that current lack of investment in the underlying business. If you are in names that are doing heavy buybacks, yes, enjoy the ride. But personally, I'm looking at names that are investing in themselves and that have a clear vision for the future, like Tesla. Okay, last thing, we'll just pull up ForEx Factory really quickly, and the main things to watch is CPI tomorrow on Tuesday, and then on Thursday we have PPI with Jerome Powell coming out to speak right after. You keep your eyes on him because he's a slippery one at the moment. I don't quite trust him. But let's get into the charts. I'm going to pull up TradingView first, and we've got the SPX here. And you can see we had that clear gap up over the weekend, and everybody's saying, oh my gosh, look, we've, on a generalized scale, outpaced the losses from Liberation Day there on the 2nd. Well, I would argue that the market started dropping on the talks of tariffs here, so we've still got some work to do, but we are looking pretty darn good in the interim. We do have this little gap fill to the underside at 56.89, and overhead, I would say our resistance starts coming in between 5,900 to 6,000. That goes to these previous tops and bottoms over here in this consolidation zone. And I really think that this gap up has set the tone for the markets for the week, and also really opens us up to that V-shaped style recovery as opposed to, a double bottom testing levels down here. And we may see some chop this week, but I suspect now, hopefully the 200 DMA will turn into support around 57.50. And at the very worst, we go down to test this, and catalyst for that could be bad CPI data, perhaps PPI to a lesser degree, or something that Jerome Powell says. So keep your eyes on that, but my base case is that we continue to work our way up with a potential correction on one of those bigger events, or perhaps a rogue tweak coming through. If we switch over to the NASDAQ, very similar chart closing into the high of the day. We are just into a bit of resistance here at 20,930, just overhead. So the NASDAQ has recovered a little faster. We have the 200 DMA down here at 20,213. So that would be underside support if we chop around it all. That also marks our gap fill on the nose. So a very clear level to watch there on the NASDAQ. Okay, if we switch over really quickly to SMH, the Semiconductors ETF, you can see we had a huge break. We got above that 50% resistance that we were discussing on Friday, and we also got above and closed above the 200-day moving average. So this is a huge sign of strength for this sector. Let's watch it to make sure that continues. But as I mentioned before, this needs to lead to get us to new all-time highs. If we do see a correction in the S&P 500, I would imagine that this sector would pull back to about the 50% level here. But one way I like to look at relative strength, and this is something I would encourage you to do on your own charts, if you're looking at a particular sector to see if it's strong or weak compared to the S&P 500, you can just put in that sector. So here we have SMH, and we'll divide that by the SPY and hit enter. And now this chart compares the strength of the two. And one thing that I haven't talked about much here, but that I was tracking, was just this downtrending resistance roughly right here. So you could see that the semiconductors continued to break down against the S&P 500. And then once we had our lows, this sector started picking up momentum, and percentage-wise has been outperforming and outpacing the S&P 500. So just a nice little comparison chart you can pull up there if you're looking for relative strength in a sector. Now, speaking of strength in markets, we'll just switch over to the dollar real quickly to see what that's doing. And it had a big break up today and closed close to the highs of the day off that inverse head and shoulders off the bottom. This is an area where I would anticipate resistance starting to come in. We do think the macro picture is still pointing to a further breakdown in the US dollar, so I would anticipate a correction starting somewhere around this range, or if the dollar is really strong, maybe going up to 103, somewhere around there at the most, and then eventually breaking down and continuing lower. If we go over to gold, that continued to break down and close near the lows of the day, and this is just showing you, remember last week when we had those couple uncertain days where it was risk off, money started piling back into gold, and now things are clearly risk on. And money is moving out of gold. Again, as we said on Friday, we anticipate continued consolidation here until gold figures out which way it wants to break. But if gold does break down from this range sooner than later, that would be a very strong sign for markets that is really risk on and people are piling into stocks heavily. Okay, last one before we get into the fun charts, I'll just pull up natural gas really quickly. I did re-enter this today at about 395 on a short via KOLD. So to recap from last week, inverse head and shoulders. On this retest, I got in and got stopped out risk-free last week. And now we were into these previous peaks over here where you saw a lot of resistance and this little volume cluster. So I decided as this started up here and started dropping down this morning to enter a position at 395, so right at that blue line. We had a good start today, and I'm hoping for a continued breakdown to the targets down here at about 285 to 262. So if you are playing that one in cold, just be careful because it is a leveraged ETF, and if it turns against you, the losses can mount quickly. That's why I always like to move my stop loss down and get risk-free in the trade as soon as possible, but that also has the liability of stopping you out of the trade. Okay, jumping into the charts and just pulling up Google here, which is one I haven't pulled up before, but out of all the Magnificent Seven, this one is the best value right now. If you look at the PE ratio, all their revenue streams, their continued growth, and it just got beat up both on the antitrust lawsuit news and then Apple potentially pulling them out as the default search engine within Safari. But if you look at it, it is a good value right now, and the YouTube and search ad business are very strong. Their earnings report was solid. They are continuing to grow. And they are also one of those businesses. I have a friend who works there in management who said that they could cut 20% of their staff and still function at a very similar level. So they have the ability to cut costs and increase revenue. And I think there are going to be more tailwinds for Google than most people suspect. It has had a solid recovery from the tariff bottom right here at 140. Last week, that was the correction on the SEC news to 147. Now we're at about 158. So I missed that entry. I'm looking for a potential retrace if we have any correction this week to try to get an entry at like 150. I would be very happy with that. Just looking out over the longer term, we have not spent much time at all above 150. And this would just be a position that I would hold for the next several months to see where it can run to. I think we could definitely outpace the all-time highs at 207. I would say the one thing to look out for is a warning sign. If we can't break these all-time highs and we set a lower high here, since we had this lower low, that would potentially point to further breakdown, and I don't know what that would be to cause that in the future. But let's assume maybe we rally up and the antitrust lawsuits go through and they have to break up their business into multiple companies. Well, then I could see it having a big turnaround and we would form some kind of big head and shoulders at the top here. So that's something to look out for, but I do think there's at least a bit of a run up in it, so it's one I'm watching for a good entry. Okay, switching over to Bitcoin briefly on the weekly, and I'm starting on the weekly because I said at the end of last week, if we have a weekly close above 105,000, we would most likely see all-time highs sooner than later. And I was saying that as a round number because these past weekly tops were at 104,500 roughly. And that was the line in the sand. If we would have closed above that, that would show strength in the charts that we haven't seen before. And my base case would have been that we would rather quickly see all-time highs. Now, since we closed a little bit below that, I imagine we are most likely going to see a bit of consolidation for a week or two, and then we'll continue on that move. So my bias is still to the upside, but I'm just anticipating a bit of consolidation now before we mount the move for that next leg up. If we are zooming into the daily, I would have loved to see that 102,500 level hold. Since we did pierce that, I imagine it does open us up to a little bigger correction now, and I would be looking somewhere around 98,000. So I'm not just saying that 98,000 because of these past highs. I also see the volume support here, and if we draw just a little bit of a speculative underside support from this uptrend, right here in the next 2 days, that would be right at 98,000. So if from CPI or something like that, we do see a bit of a correction, that could potentially mark our low, and then we bounce away from there. But again, this is all speculation until we get a third bounce off of a support line like that. The last thing I want to pull up just to help you get a lead on the Bitcoin and crypto markets is the USDT.D chart, which is the market cap or dominance percentage of Tether's stablecoin USDT. And you can see that spiked as we had our low in the market. So more people are rotating out of crypto and Bitcoin. And then as they're deploying back into crypto and Bitcoin, we see this drop. Now this level here marks our past all-time highs from December and January. So we really need to see that break. You can see that Bitcoin, relatively speaking, has already outpaced this. So Bitcoin is taking more market cap than the altcoins right now. But if this continues to drop and Bitcoin is in a consolidation pattern and alts are starting to rally more, that's an indicator to you that it's a bit of a start of an alt season where Bitcoin's consolidating, USDT.D is dropping, and altcoins are soaking up more of that liquidity. So you can just look at these three things together to get an idea of where the money is flowing. If we flip over to Solana, you can see we had a fairly strong rejection from our target at 180,000 and that 200-day moving average. We dropped about $13 and then had a pretty strong bounce after hours. This drop actually wasn't as severe as the drop on Bitcoin today. So while in this past consolidation, Solana was looking a little weaker than Bitcoin, in this current consolidation, even though we are making lower lows, it is holding up a little stronger than Bitcoin right now. And we'll talk about some of the proxies in a moment and why that could be. Okay, zooming way out to the daily chart on Solana, I just want to project where we could potentially find support if we get a rejection. And I had this trend line previously drawn in on my other chart, and it's an underside support that we've had for the majority of the bull market. You can see how it played support. We did get a day of support here before breaking through, but we chopped around that zone, then resistance. We hit it a bunch of times, then we finally broke through. So that's been a big uptrending support line. And if we zoom back in, that is coming in the next couple of days at 157 or so, which incidentally also marks these previous tops from the last consolidation. So 157, I think, would be my lowest downside target for a correction. And then we would hopefully see a bounce away from there. If we broke below that, both because we would be breaking this swing top and because we would not be finding support from this previous resistance line, that would be a sign to me that we're breaking down further and we need to reassess more downside targets. But anything up to that level and a bounce away is definitely a sign of strength in Solana. And my base case is that we do break away from here. And our next resistance is that 50% level at around 195. So I would say that is our next big hurdle, 195 to 210, let's say. And then after that, it's fairly clear sailing all the way up to all-time highs. Okay, going over to MicroStrategy, and if you're pair trading MicroStrategy and Tesla, I hope you are in a tax-free account, you will notice that there was a big breakdown the last couple days with Tesla definitely outperforming MicroStrategy, so it was a good pair trade, and now it might be time soon to rotate back. But despite Bitcoin being strong, this has seen more of a correction. It definitely continues to feel like on Friday that Michael Saylor continues to keep tapping the ATM. So let's just keep watching this for a bit more consolidation or downside drift. We could potentially find some support here at the 50% level at $386. And then my line in the sand for any correction is around that 340, these previous tops here. So 340 to 386, that would be the major supports for any correction coming in on MicroStrategy. We are on the 4-hour. If I just bring up mean reversion really quickly, we did spike on that about 2 weeks ago or so. And now we're starting to see that drift downwards. The RSI is drifting downwards. We do have a sell signal here and our trend is about to flip. So just looking at IADSS as an indicator on top of just normal TA and what we can observe of momentum coming out of the stock, that would also be a potential indicator that there could be a bit more of a correction here on MicroStrategy. If we go over to MicroStrategy's favorite pair, Tesla, we continue to break out today. So remember at the end of last week, we broke out of this resistance zone. We got above the 200-day moving average, and then we closed strongly above that. We are now sitting just below $320. We do have our next resistance overhead at about $325 right there. You can see how that used to be support in all these ranges. So $325 is our next key level. And then beyond that, it would be pretty clear sailing all the way up to $366, which were some of these previous peaks in that range there. So those are your targets right now. If we can get through $325 this week, I imagine we may have a pretty impulsive run up to that $360 range. And beyond that, we just need to see what it's doing and if it's starting to look overheated or not. We know there can always be a lot of volatility and chop in Tesla, but that also brings a lot of great opportunities. And on the larger time frames, it is definitely looking good over the months and years ahead. Flipping over to Hood, and in a lot of these time frames, I'm on the 4-hour. I'll just get rid of the mean reversion and the RSI. So Hood continues to march to our target of that $62 and change. It had a strong open over the weekend, and then on the China tariff press release, it really dropped more than the rest of the market. It's such a funny stock that is so impacted by the tariff news. Like when things go risk off, hood really sells off, even though it's not beholden to tariffs. But then it climbed strongly into the latter half of the day, and we closed kind of in the middle of that range. So decent candle close. I would imagine we keep stair-stepping up till eventually hitting that target. And at that point, I'm going to be looking at the mean reversion, then the RSI, which on the 4-hour is already pretty toppy. But if that really gets into the green here and we are at that 2 standard deviations overbought, I would consider maybe rotating out of a little bit of hood at this level to see where it corrects to. But again, we just need to take this one day at a time and see how things are looking when we do hit our target. If we go to the daily, mean reversion still has a bit to run, and we're just starting to get into overbought territory on the daily RSI. So yeah, more room to move. Okay, I'm going to pull up one I haven't pulled up for a while, which is MU, Micron Technology. And if you recall, I was trading this long and short in this consolidation range where it was chopping around for months and months. And there were lots of great trades in here. And then we broke down on Liberation Day. I mean, we really broke down on this one. And I was watching it. And once it got to this level here, it had my attention last week. And I just didn't keep a close eye on it. I actually wanted to enter to see if it could break back into the range. And today we had a big decisive move up, almost right into the 200 DMA. So because of the strength this has been showing, it's not a great entry to chase right now, but I'm keeping my eyes on this. And with semiconductors coming back, MU provides some of the critical memory components to a lot of the chip manufacturers. There could be strength coming back into this stock, and I could actually see us breaking back through this range and testing new all-time highs before too long. But I want to try to scout a better entry. So I have my alert set here at the bottom of the range at $86. And if we back test that in the next couple of weeks, I would be keen to enter a position and see where this can go and if we can't break out from this consolidation range. Okay, going over to Celsius, this one, like we were saying on Friday, continues to march higher. We did have a bigger intraday correction, just like Hood had on the tariff press release, and then we bounced back pretty strongly. So I'm looking for this to break this range at $39 to $42, and then clear skies up to 62 after that, but I'm just holding this position. If we go over to Deckers, this is another one that is marching to our target of that $137. We did today intraday see a pretty big spike and pullback on this one. So you can see because of all their overseas manufacturing, we really spiked up at the start of the day up to 133, almost to our price target. And then when the tariff press release kicked in, this one really dropped back down all the way back down to 123. And then we started climbing towards the end of the day like the rest of the market. I would have loved to see this close just a little bit higher above some of these old peaks, but I'm keeping my eyes on this and anticipate that if the market continues to grind up, this will do the same. And then in terms of signs for an exit, I'm just watching that RSI on the 4-hour. We already got a little bit overheated. We have a bit of a bearish divergence. On the daily, we still have some room to run. So because of the length and time of this correction, I'm really watching the RSI on the daily, and any spikes on the daily above 70 would get my attention to potentially exit this play. Okay, Palantir, not much has changed since Friday. We did move up a little bit higher with the rest of the market, but again, I think this is just chopping and finding some equilibrium. We pretty much closed that gap fill to the upside. So I need a little bit more time with this chart to see what it does to really determine, can we break these previous highs, or are we setting a lower high here and then we're going to correct a little bit more and just have the stock find its footing before it decides on its next move. Okay, last one for the day, just pulling up the DeFi Development Corporation, or Quest here from Chewy. Shout out to Chewy, formerly known as Genover. So the problem is TradingView switched this ticker over from JNVR to DFDV, and they erased all the previous trading data. So from the spike up when they adopted their crypto strategy, I'm missing all that data and all the support levels. The one thing I will say about this, on the retrace to $50, we started, I think, down at like $3 or $7. It was, it's really had a massive run. It had this huge bounce away to just under $100. And with all the other names like CEP, KDLY, NXTT, NVEE are all showing weakness, but this one is showing strength. ASST is showing strength. And so the market is liking these more, whereas the others, I think the market is thinking that, oh, there's already a MicroStrategy out there. Their value proposition or their strategy isn't unique or different enough. MicroStrategy has the first mover advantage. So anyway, all I can say on this one, Chewy, is that the strength is in the chart, and the strength is also in comparing it to the other names that have a similar strategy that are underperforming. So it seems to me that strength can continue to come through in this one, and names that have been playing more of the Solana reserve strategy have definitely been outperforming names that play the Bitcoin reserve strategy. So I hope that's helpful. I don't really have any targets, but we do have support here at $73. You can see that clearly, at least on the 1 hour chart. And then this big bottom that we bounced away from at 53. And then I would have to pull up the historical data, but I remember like at 15 and like I think $33, there was some support down below. But anyway, that's all I've got there. So all in all, a very solid start to the week, but keep your eyes on CPI, PPI, and of course, Jerome Powell speaking on Thursday. Again, I'm really leaning more towards the V-shaped recovery shaping up now, given all the developments of the last few days. Before that, I was thinking, yeah, we may get that double bottom and I could get some really cheap entries, but now I'm looking at any dips as opportunities for buying. So have a lovely week ahead. I look forward to seeing you guys all on Friday. Bye for now.